It's funny, when you think about trading success, you probably picture, like, complex charts, maybe economic reports, some kind of secret indicator.
Yeah, all the technical stuff.
But what if the real secret weapon, the thing that really makes the difference, isn't out there? What if it's inside your own head?
That's exactly what we're diving into today, mastering trading psychology. Because look, you can have the best system, truly cutting-edge stuff.
Right.
But if your mindset's shaky, it's like giving someone a Formula One car, but they're, too nervous to really drive it. You just won't get the performance.
Totally. And the material we looked at, it really does shine a light on both sides of this coin. The potential mental traps, the hazards, as they call them.
And also the crucial safeguards. The things you can build to protect yourself, your capital.
Yeah, the mental toolkit.
And it's key for listeners to get this. This isn't like flipping a switch. It's a journey. It's constant work, refining how you think and react. Like any high-level skill, really.
Just think about what you're actually doing as a trader. It's like running this incredibly high-stakes business.
All by yourself.
Yeah. You're the CEO making the big calls. You're the one clicking the buttons. And you're even the one cleaning up the mess and figuring out what went wrong.
And the speed of it. That's a big differentiator. In a lot of jobs, you can deliberate, ask around, take your time.
Right. Committee meetings.
Exactly. But in trading, decisions often happen in seconds. And it's just you. It's interesting. Some people are great analysts, great advisors.
But making that final call solo.
That's a different skill set entirely, that pressure.
That whole idea of trading as a business where you're the sole proprietor, that really came through. You own every single decision.
For better or worse.
Yeah.
And you need to be comfortable with that ultimate responsibility. Like we said, analyzing is one part, but having the emotional strength to act decisively under pressure, that's huge.
And things will go wrong.
Yeah.
Trades will lose. It's inevitable. That's where resilience kicks in.
Yeah.
Right?
Absolutely. It's not about never losing. That's just not realistic in trading.
No way.
It's about how you handle it, how you bounce back after a loss, or maybe even a string of losses.
Emotionally, strategically.
Both. And we read some pretty compelling stories, didn't we, about traders who took massive hits, huge losses.
Yeah.
And they managed to come back, not just recover, but actually learn from it, get stronger.
It's like a mini comeback story every time someone takes a loss properly and keeps going with their plan.
And here's the thing, resilience isn't something you're just born with. It's a skill. You cultivate it. It takes mental toughness.
Like training a muscle.
Exactly like training a muscle. It needs consistent practice.
Yeah.
Challenging those negative thoughts that pop up after a bad trade, for instance.
Right.
That's cognitive restructuring, and it's a way to build that resilience.
Okay, so let's dig into some of those mental traps.
Yeah.
The hazards. Averaging down seems like a big one.
Oh, definitely. Averaging down. Adding more money to a losing trade because you hope it'll turn around.
Feels like you're getting a bargain, maybe.
Hey. It can feel that way, yeah. But what usually happens is you just dig yourself a deeper hole. It often comes from loss aversion, that psychological pain of admitting you were wrong.
So you double down.
You double down, hoping to avoid locking in the loss, basically throwing good money after bad. It can be disastrous.
Okay, another one. Turning a day trade into a swing trade.
Yeah.
I mean, who hasn't been tempted?
Oh, yeah. Very common. You plan to be out. By the end of the day, the trade goes against you.
And instead of taking that small hit,
you think, maybe it'll come back overnight, so you hold it. But now you've broken your own rules. You've taken on overnight risk you didn't plan for.
and potentially a much bigger loss.
Exactly. Discipline goes out the window.
Then there's overtrading. One source called it, crack addict trading syndrome.
Huh. Yeah, pretty vivid term.
It really gets the point across, that impulsivity.
It does. Overtrading is often driven by the excitement, the buzz, maybe even the dopamine hit you get from being active in the market.
Chasing the action.
Yeah. But the problem is, it leads to impulsive trades, emotional decisions, no real strategy. You're just reacting. It rarely ends well.
And the last big hazard they mentioned, revenge trading. That feeling after a loss where you just have to make it back immediately.
It's such a powerful urge. You feel angry, maybe frustrated, like the market owes you one. So you jump right back in, often taking bigger risks, trying to force a win. But it's pure emotion driving the train. Almost never works.
So what do you do instead?
Best thing, step away. Seriously.
Yeah.
Take a break, calm down, refocus on your actual process, your rules, not on clawing back that specific loss right now.
Okay, so those are some pretty scary pitfalls. Let's flip it. Let's talk about the psychological safeguards, the positive habits. daily profit targets came up early.
Yeah, setting those targets, it does a couple of things. One, it gives you a clear goal, a sense of accomplishment when you hit it.
Like, okay, job done for today.
Exactly. And two, it's a crucial risk management tool. Knowing when to stop trading is just as important as knowing when to start, whether you hit your profit goal or your preset loss limit for the day.
Stop yourself from giving it all back or digging a deeper hole.
Precisely. It prevents that.
And you can't really talk safeguards without hammering on clear rules, can you? It sounds simple, but...
It sounds simple, but sticking to them consistently, that's the hard part for many. Your rules need to be, well, simple, unambiguous, written down even.
like guardrails for your behavior.
That's a great way to put it. They keep you from driving off the cliff when things get emotional or volatile.
Okay, what about slumps? Everyone hits them. How do you bounce back from those?
First, you have to acknowledge it's happening, but without panicking or throwing your whole strategy out. Often, a slump is more mental than anything else.
Confidence gets shaken.
Big time.
Yeah.
So maybe reduce your trading size for a bit, take the pressure off, and consciously go back and review your past successful trades. Remember what works, rebuild that belief.
That makes sense. Now, trade books. That sounded interesting, like more than just a trading journal.
Yeah, it's more proactive. A trade book is like a detailed playbook for each specific strategy you use.
So what goes in it?
Everything. The exact setup criteria, how you select the stock, your entry signal, your stop-loss placement, your profit targets, how you'll manage the trade, and how you'll review it afterwards.
Wow, okay, so it's literally the blueprint before you even think about placing the trade.
Exactly. It forces you to think it all through objectively beforehand, rather than making it up as you go along or reacting to fear and greed in the moment.
Keeps you focused on the plan.
Helps filter out the noise, which ties into another point, focusing your efforts. Don't try to trade everything.
Master a few things well.
Yes. Get really, really good at a limited number of setups or maybe just a handful of stocks. Deep knowledge is better than shallow knowledge spread thin.
You develop a real feel for it.
A much deeper understanding, yeah. Better decisions, usually better results.
Another big safeguard seemed to be about self-awareness, really knowing yourself.
Oh, fundamental. You absolutely have to align your trading style with your personality. What's your risk tolerance, really? How much time can you actually dedicate?
So scalping versus swing trading versus position trading.
They demand very different things. Scalping is intense, fast-paced, needs constant focus. Position trading is much slower, needs patience. If your style doesn't fit you, your temperament, your life, you're setting yourself up for stress and failure.
You'll burn out or just won't stick with it.
Exactly. And related to knowing yourself is developing independent thinking, not just following the herd.
Resisting the FOMO, the fear of missing out.
Resisting the FOMO, resisting the panic when everyone else is selling. You need to trust your own analysis, your own judgment. The crowd is often wrong, especially at turning points.
That takes courage, though.
It does. And it takes practice, which leads to another safeguard. Self-reflection.
Like journaling. Keeping track.
Yes, but going deeper than just logging trades. Regularly reviewing your journal, asking why you took that trade. What were you feeling? Were you following a rule?
Identifying your own patterns, your biases.
Your triggers. What makes you deviate from your plan? Understanding that is critical for improvement.
Okay, goal setting. We hear about that everywhere, but how does it apply specifically to trading psychology?
Well, the key is setting realistic goals, achievable ones. And critically, focusing more on the process goals than just the money goals.
What do you mean by process goals?
Things like, I will follow my entry rules on every trade today, or I will stick to my stop-loss levels no matter what. Focus on executing your plan flawlessly.
And the profits will follow.
That's the idea. Consistent, disciplined execution is more sustainable than just chasing dollar signs, which often leads to taking stupid risks. Small, steady progress is the name of the game.
And inevitably, there will be bad days, losing days. How do you handle those mentally?
First, accept them. Losses are just part of the cost of doing business and trading. They will happen.
Can't avoid them entirely.
No. So the key is to learn from them, analyze what happened objectively, but don't let them crush your confidence or derail your plan. Don't let one bad day turn into a bad week.
Easier said than done sometimes.
It is. That's where remembering your why comes in. Why are you trading in the first place? Keeping that bigger picture in mind can help you push through the tough days.
Finally, something that seems almost separate, but apparently isn't. Lifestyle. Sleep, diet, exercise.
Yeah, it sounds basic, maybe even cliche, but it's so interconnected. Your physical state hugely impacts your mental state.
If you're tired or running on junk food.
Your focus suffers. Your decision-making gets worse. You're less resilient to stress and frustration. Trading requires peak mental performance, sharpness, focus, emotional control.
So getting enough sleep, eating well, moving your body.
It all contributes directly to your ability to trade effectively. Some traders really focus on mindful eating, consistent sleep schedules. It builds that foundation for mental strength.
Wow. Okay, so pulling this all together for this deep dive, it's just incredibly clear, isn't it? Mastering the mental game, the psychology. It's not just like an optional extra in trading.
No, it's absolutely fundamental. You could argue it's more important than the technical skills sometimes.
That emotional intelligence, that resilience, that discipline.
They are the bedrock. Without them, even the best strategy can fall apart under pressure.
It really hammers home that idea you mentioned earlier. Mastering trading psychology, it's a marathon, definitely not a sprint.
Absolutely. It takes ongoing effort, self-awareness, and a real commitment to continuous improvement.
Right. And maybe that leaves us, and the listener, with a final thought to chew on. Beyond just trading, what's the biggest psychological hurdle you might be facing right now in chasing whatever goal is important to you? Where is your own mindset maybe holding you back? Something worth thinking about.